Good afternoon and welcome to BizTech's Asian Midday Market Watch. It's Friday at last, the 27th of September. I'm Jeffrey Halley and co-hosting with me today is the lovely Samantha Voon. Let's get straight into the overnight news roundup and most notably the S&P 500 closed at a record high overnight with the Dow Jones and the Nasdaq also rising. Most of those gains were driven by Micron, which is in the AI space, which produced a cracking set of numbers yesterday, sparking yet another tech rally. And this was aided also by strong US jobless claims reports, which eased labour market concerns and those recessionary fears. The benchmark S&P 500 closed up 23 points or 0.4% at 5,745.37. And with the Dow Jones rising 260 points or 0.62% to 42,175.11. Bringing up the rear, the Nasdaq Composite advanced 108 points. It rose by 0.6% to 18,190.29. The China stimulus announcements that we saw yesterday and indeed all week also saw base metals rally sharply overnight, led by rallies in lithium and copper. Not quite the same story in energy markets though, where oversupply concerns saw WTI slump for the second day in a row, falling sharply by 3.4% to $67.4 a barrel, driven by concerns that Saudi Arabia is pondering increasing supply from December and ignoring trying to hold prices higher. Currency markets continue their very choppy range trading, a pattern we've seen for most of the week ahead of US data tonight. The dollar index fell by 0.35% to 100.57, with the very China-centric Australian and New Zealand dollars recovering all of their previous day's losses. This morning in Asia, the main data point has been Tokyo core CPI. That rose by 2.0% year on year. That was less than expected. However, Japanese markets remain focused on the LDP leadership election contest to elect the next candidate for Prime Minister ahead of national elections that are coming up very, very shortly. And now I will pass it over to Samantha to take us through the price action on Asian stock markets today.
Thank you, Jeff. So we have the Nikkei 225 in Japan up 1.50%, and the Shanghai Composite up 2.38%. And in Hong Kong, the Hang Seng is up 3.58%. In Australia, the ASX 200 is up 0.16%. In Korea, the Kospi is up 0.29%. In Singapore, the STI is down 0.44%. And in Kuala Lumpur, the KLCI is down 0.72%.
Thanks very much, Sam. Let's bring in today's guest, the head or the founder and CIO of Track Record Trading Academy in Singapore, Phan Leung. V, great to have you on the show and happy Friday.
Hey, happy Friday. Good to be here. Let's talk about markets.
Alrighty, let's get straight into it, mate. Well, let's have a look at that price action in Asian stock markets today. China still seems to be on fire. Another set of huge rallies in both mainland and Hong Kong markets. Is this a sign of confidence in the government's measures announced this week, or is this just a speculative frenzy ahead of the long Golden Week holidays starting on Tuesday next week?
I think this is a real rally. We have been disappointed by the Chinese government on this front many times in the past 2 years, where they said they will implement measures, but they were half-hearted measures. And I think they intentionally do it this time with repeatedly announcing measures every day of this week, almost, right? And they are trying to send a strong message to both investors and speculators as well that they mean business this time. And it's a message that is going to resonate, and we will see this rally persist if they continue to keep up with this pace of commitment in announcing measures to help the economies. So they have come up with rate cuts, reserve requirement cuts, as well as measures where they said that financial institutions can borrow from the central bank to buy stocks. That's something new. We don't know how it works yet, but I think it's a positive sign. They are saying to the people at large that they are not just trying to boost the economy, but they are also trying to support the asset markets. So in the past few years, we have since the common prosperity policies were implemented, it kind of seems like they don't really care about where the assets market go. Because it's only participated by a narrow range of wealth people with a certain amount of wealth in the system. So they I think that's the end of that. We are seeing a commitment from the policymakers to send this strong message that the drought is over. They're here to help, and we are likely to see more measures ahead, and we are likely to see price action continue to be strong, especially after the Golden Week holidays as well.
So, V, how about outside of China? Is there anything else that you're looking into coming this end of the week or early next week?
Well, later today, we will have the U.S. Federal Reserve's preferred measure of inflation, the PCE, Personal Consumption Expenditure Index. That's their go-to measure for inflation, and it's expected to drop from 2.5% yearly rise in a month previous to August to we are likely to see at the price rises to be at 2.3%. But if it moderates further than expected, more than expected, we will see risk and sentiment being boosted, because that will increase confidence that the Fed is doing the right thing in cutting 50 basis points in the meeting recently, and also that they will likely cut more and at a faster pace in the meetings ahead. And I think this is the trend that we are seeing in developed economies. We are seeing inflation coming in lower than expected, and I think it was going to be the same way as when inflation was on the rise. We saw when it spiraled higher, it just spiraled higher in a very quick fashion, and I think we are going to see that as well when actual inflation comes in lower than expected. Inflation expectations drop. As inflation expectations drop, actual inflation drops further, and I think we're going to see this virtuous cycle now. Previously, when it was spiraling up, it was the vicious cycle. I think we're going to see this virtuous cycle at play, and the Fed's focus will be moved more towards keeping the jobs market stable rather than risking further weakness in the jobs market. And they are likely to say that as well. And we saw them saying that in the last few occasions where Fed policymakers make comments to the press.
Great stuff. V, both ourselves and our viewers love your insights on the crypto space, so we just have to go there today. I've been away for 3 months finishing off my master's degree, but in that time, Bitcoin does seem to have traded in a very large but choppy range trading scenario. But it seems to be impervious to movements in US rates, either up or down. And now we're starting to see the beginnings of a rally again. Are there any particular levels you're watching in Bitcoin from here? And what is your overall view, directional view for Bitcoin from here?
Well, I think we saw extreme bearishness at one point during the time that you took off. I guess maybe without your persistent buying to support the market kind of collapsed. Now you're back, then we are seeing it go higher again. I guess that's the sign I'm looking for. But on a serious note, I think Bitcoin has been creeping up since the extreme bearishness, and it's because of several reasons. One is that mainstream adoption continues unabated, right? It continues. We are seeing two of the primary candidates in the U.S. election. Now is narrowed down to two candidates in the U.S. Presidential elections. They are both very supportive of cryptos. So that has increased the attention in this sector. Since that 3 months ago, we have seen not just Bitcoin ETFs, we are now seeing Ether ETFs as well. And this is also helping sentiment in that many of the more established traditional finance institutions, they are now more open to recommending Bitcoin ETF as a component in the portfolio construction of mainstream investors. So this has been going on despite higher interest rates, extreme bullishness, extreme bearishness in the cryptocurrency sector. And if you look at it, we're back at 65,000, not that far off from the all-time highs. And as you mentioned earlier, in the environment of falling interest rates, especially global interest rates are falling, most central banks are cutting interest rates, except for one, Japan, and I guess they don't really influence the global sentiment anymore. We are seeing extremely strong measures from the Chinese government to boost the economy, as well as to cut interest rates, as well as to boost asset markets. I think that's going to bolster risk assets across the board. Any hard assets, we are seeing gold making all-time highs every other day these days, right? And it's under the radar. Nobody talks about it anymore because it happens all the time. And I think we will see Bitcoin start to participate in that as well. So I guess my opinion will remain the same as it's always been the case. Long term is always a buy. It's just a matter of whether you buy it here or you buy it lower or you buy it higher.
Right. And I can see that 65 looked like it was a bit of a chart point. I was just looking at the charts off screen here now. So I understand there's some quite large options expiries due today as well. Do you think that will have an impact in the short term on the price?
I guess it's a very volatile product, right? I think it moves 3-5% either way on barely any news headlines. So it doesn't really affect the longer term picture. I think from here forth, unless we see something to change the trajectory substantially, it seems like almost every dip should be bought going forward.
Right.
I think it's a strong statement, but it's because we are seeing interest rates being cut in the major economies, and it's always in the longer term, it's always been a function of how much money there is in the system. There's a lot of money on the sidelines waiting to be deployed. When the Fed cut interest rates, and they will eventually cut more aggressively and more than expected. That's always been the case in an interest rate cutting cycle. We will likely see, and as you can tell, also the attention on Bitcoin has dropped drastically since a few months ago. No one really mentions it anymore because it's been just in the range. I think we will start to see that change as it starts to test all-time highs again.
Great stuff. V, thanks so much for coming on the show today, and have a great weekend ahead.
You too. Thank you very much.
We've been speaking to Phan Leung, founder and CIO of Track Record Trading Academy in Singapore. This has been BizTech's Asian Midday Market Watch. Be sure to keep informed on the latest updates each weekday, I should say, at 1 p.m. Singapore time. I'm Jeffrey Halley.
And I'm Samantha Voon.
And this video and podcast will be on our website, www.biztech.asia, as well as our social media platforms. You can also catch it with our syndication partners, TV stations, radio stations, and websites. Remember to like and subscribe. Thanks so much for tuning in today.